On set is my great friend Sandra Smith, co-anchor of America Reports. Thank you, Sandra.
Thanks for having me, Larry. Are you ready for me? Because, I mean, you just got me.
I'm just totally ready for you.
You just got me all riled up.
I'm just going to say go.
I ran into your senior producer in the hallway, and I said, let Larry know I'm going to talk about oil for a second. And it pertains to everything you just said.
Whoa.
When you look at the stress that this is putting on the system, and to your point about taxpayers being on the hook, yes, they fund the FDIC. Yes, that's how they're getting shored up right now. So anybody who calls this says this is not a bailout, they're just plain wrong. This is also going to, by the way, be hard on the American public. You're going to see a tightening lending environment. Loans are going to be harder to come by. So the American public, the American consumer, is going to pay for this in many different ways. But the stress on the system is the bigger picture. And you're seeing the stress on the system when it comes to the stock market. Obviously, you saw the yields drop in the Treasury market. I'll talk about that in just a second. But you look at oil, I just looked for you. $68 right now, down $3.30 in the day. That's almost a 5% drop. Lowest that oil has traded since December 2021. RBOB gasoline, wholesale gasoline prices, down 4% in a single trading day. Economic barometer? Sure, we've been asking that question because oil's been selling off for quite some time. I put a call into the trading desks in Chicago. They're talking about big banks. They trade the oil, right? There's going to be a massive deleveraging right now. There's going to be risk taken off the table. That's a risk trade, obviously. So you're seeing oil get hit.
Is this an economic collapse scenario?
I think you just have to start identifying these things are happening.
I mean, it's just a deep yogurt scenario?
So
they may bounce back, but you're saying the news is so bad.
They certainly could bounce back. However, you now have a situation where SVB is dictating Federal Reserve policy. And I say it like that because it's a question. Can you look at it like that? Okay, so you know the CME groups, the CME group keeps the Fed fund tracker. Okay, we watch it closely. You're looking at the next Federal Reserve meeting where traders think that there's less than a 4 in 10 chance the Fed will raise rates. Weren't we just a minute ago talking about the Fed having to raise rates faster and higher to tame this stubborn inflation? So now you're talking about more than a 6 in 10 chance the central bank will hold rates steady. And wait for this.
At the next meeting.
At the next meeting. The Fed could lower rates in early summer. I mean, they're figuring there's a 50% chance the Fed's benchmark rate could be lower than it is now.
I just want to say one thing. I don't want to get into a fight with the CME crowd, but they've been wrong all the way through.
Those are market predictions.
I know.
That's money backing.
The market has been wrong because the market was selling this idea that the inflation was going to deflate and that the Fed would be pausing and then cutting rates right away.
That might happen.
Instead, the Fed raised rates.
That might happen.
The Fed should pause this month, if you ask me. Just this month. Unless there's a big contagion.
But would you have said that before SVB?
No. But
that's my point. So you're talking about the cause of the SVB meltdown is bad risk-taking, bad management decisions. So therefore, you have, what does it come down to? One banker on the board of that bank? You have bad management decisions that are now dictating what our Federal Reserve's next move is. Is that a stretch?
For a moment. It's a stretch. A little bit of a stretch. I would just say for a moment. I mean, I think, look, you saw the inflation, CPI yesterday. You're still up 6%, and the monthly numbers are coming in rising, not falling.
So we should be in an environment where the Fed's more aggressive.
Well, I think they would. Look, if I were in the Fed, I mean, 5 centuries ago, I started my career at the New York Fed. I would pause. You have to. But we'll see what they do. But that doesn't mean it's going to be forever. I mean, the CME crowd has had the story pretty wrong for a while about the Fed. So I'm a little skeptical.
That's not the CME crowd. That's the Fed fund futures rate.
Right. So the CME sponsored Fed fund futures rate, is that what they call themselves?
Okay.
Whatever
all right.
they call
I believe that money gets poured into that from all over the world.
It does, but I think they may be faked out now, by the way. We'll see how Jay Powell. You know, if Jay Powell believes that this emergency funding mechanism is good and stops the frenzy.
Too.
I do. And as a firewall or a fire break against contagion. If he believes that, he would raise the funds rate by a quarter.
Now,
then I'm going to hold you to account. You're going to have to come here on the show.
I'll come back anytime. No, but I think all these things are worth noting. And I quoted this earlier. Mohammed El-Arian joined me on Monday, and I played it again on my show, and I think it's really important. He obviously advised Democrat presidents. We had Robert Wolf advise Democrat. They came to agreement on this. Mohammed said something with me on Monday, and he said, I fear you cannot put the genie back in the bottle. Politically, it's going to be impossible not to extend the same full unlimited deposit guarantee to all banks. So that is a very interesting moment that we are in as a country, if that is indeed the case.
Yeah, I agree with that. I mean, I think they made a mistake just with SVP, for example. It does raise the moral hazard issue if they universalize it. I don't know that they will, but this comes back to my point. Let the private sector buy this bank.
Amen.
And take the FDIC off the hook and take the taxpayer off the hook. And then we won't have to test out whether we're going to universalize and guarantee every deposit at every large bank. In other words, what you're really asking is too big to fail. How far down the line is too big to fail? We tried to deal with that. That's one of the reasons we had some very modest deregulation back in 2018, is to prevent that from happening. My hope is it won't happen. But what do you think about Walter Bagehot? I knew Walter Bagehot. He was writing in the mid-19th century. That was a joke.
You do this to me every time.
But I'm saying lend freely at good collateral at a penalty rate.
Yeah.
Now, that's the best part of the story. Nobody's really talking about what the Fed and the Treasury have done. That's the ultimate backstop.
I think that's really interesting. I think it also goes back to the confidence, though. You played that sound from Jay Powell also in your opening riff. And I think we're in a moment, Larry, where so many I have spoken with since this meltdown began have called on the president to come out and invoke some sort of calm or, make sure the American people knows that the American banking system is secure.
Don't do this to us.
But Jay Powell can't even be leaned on for that in this moment. And I think that's a really interesting point, and it needs to be made. Who is that voice today? I mean, we don't even have a Larry Kudlow in the White House right now.
Who is Mary Daly? Why didn't she do her job in San Francisco? Seriously.
Yeah.
By the way, it's the other bank, too. What is it, First Republic?
Yeah.
They're on the verge. I hope we don't need to do anything with them. But it's not about regulation all the time. It's about supervisory and examination that they didn't do.
Amen.
And that's a terrible omission, and she hasn't ponied up yet. I haven't heard a peep out of her. And Jay Powell says he's going to have an investigation inside the Fed. I hope what he said is still true, because she's a big climate change person. And by the way, doesn't break the law. Yeah. It's just a question of, does that enter into her calculations as a bank examiner, which she is in large part. Because this crazy Silicon Valley Bank, they're going to put $5 billion into climate change, diversity, equity, inclusion. They were giving money to Black Lives Matter at the height of the race riots and the pandemic. This is nutty stuff. Banks not supposed to do that. So the moral of the story is, sell it. Stop screwing around.
You heard it
and
here.
Sell it.
Now
sell it.
Now I want to know, because this national bank stepping in Switzerland to put their support, but that changed everything today. During my show, the markets Dow was down over 700 points, came back a lot because of that. Was that pressure from the United States? I think that's also a really important question. Did we pressure?
Not Swiss National Bank. They're
saying.
tough. They're sound money people. But they'll probably bail them out.
Was it the right move?
Credit Suisse has been on the verge for years.
For a while.
I hate to say it,
Yeah,
but
it's true.
It's true.
It's true.
So you own stock in the CME? I just want to close the loop here.
No.
This is
I do not.
Sandra's CME forecast.
I did grow up on the trading floors in Chicago.
I know you did. That's why I gave you this opening.
But they hadn't merged yet. So I was on both the Chicago Board of Trade and the Chicago Mercantile Exchange.
It's not the CME that's wrong, but I think the Fed funds futures market, up until the last 24, 40 hours, has been wrong pretty much the whole way. They said no more Fed tightening, and the Fed kept on tightening.
There you go.
And they're going to continue. Anyway, you can catch Sandra and her co-anchor, John Roberts, every day on...
I think you're joining us tomorrow.
America Reports, weekdays from 1 to 3 Eastern on Fox News. I would love to join you.
I'll circle back on a few of these things, Larry.
Live booking is very important, and we'll check out the whole thing.